Hello, everyone. Welcome back to Switch Markets and How to Trade. I'm Shane Vernier, and today we're going to be talking about the BOE, trading the BOE fallout. I've got a couple of markets that we're going to hit right away. The BOE came in with their rate cut as expected, but there's a lot to really read between the lines on really a decision that was hotly contested, and a lot of BS flying out of the BOE right now, and Andrew Bailey saying the decision was firmly balanced. And I said, yeah, it wasn't supposed to be, though. So we're going to be looking at that. I think it's going to be a fantastic time to be trading the pound, at least the overreaction that we're seeing today out of some of those pairs. So we're going to be looking at all things pound today. We're going to look at the FTSE. If I forget to look at the FTSE, be sure to remind me. I don't typically trade foreign indices, but definitely let me know. Let me know if you guys want to look at that FTSE 100, and we certainly will do that. I saw it was a little bit weaker than a lot expected, and that was because there was some hawkish sentiment came out of the BOE. A surprise. Remember, guys, just because we know what the interest rates are going to happen, just because we know what the BOE is going to do, or the Fed's going to do, or somebody's going to do, it doesn't mean that we know the tone, and the tone's everything in these things. There's two markets that I want to start out with. I had some great questions put to me in the live chat over at How to Trade. I'm going to go ahead and cover some short-term things. I'm on the U.S. dollar Swiss franc to start with, and the euro yen, and then we're going to recap our U.S. oil trade. I got a great question from one of our traders here. I'm in the How to Trade community that was, how do I stay in these trades, and should I stay in trades waiting for the bigger profit targets? And I'm going to give you a full case study in what can happen and what can't happen with our U.S. oil trade idea from yesterday. And, I'm going to give you my opinion on it. I'm going to give you my theory on it. And in that U.S. oil trade, if I wouldn't have taken the money when we were way ahead and that thing came back and stopped me out, when I first started and I traded with the 7V Bar Trading Group, I would have been fired with a capital F, just like the old Trump show, you're fired. I would have been fired. And so I'm going to go over what you guys need to be thinking about your trade management. I can't tell you what to do with your money, and I can't tell you how to trade. A lot of folks would argue to the death with me saying, Shane, you've got to stick in these trades. And I said, yeah, but I got bills to pay. I got car payments. I got house payments. I got things like that. So when it really, there's an old saying here in Montana, never look a gift horse in the mouth. And the idea is that when somebody gives you a gift and the market goes in your favor, you need to think about ringing the cash register. So we're going to talk about that as well, a little bit of mentality, a little bit of psychology for you. And I'm also going to point out where a lot of folks get hustled online with these systems and things, especially in back testing. They fall into back testing holes. So we got a lot to go over, guys, just like always. We're going to try to wrap this one up, though, in 30 minutes. I've been running darn near an hour all week, so hopefully it won't take too long. So good to see everybody back in the room. T. Marina, always a pleasure. T. Lita, good to see you. Lita, Allen, good to see Alan, Ralph, Bobby, Bob, Tuku. All right, guys, we got the community is in the house and ready to go. Let's go ahead and get on with it. The first two markets that we're going to cover, I had some short-term questions here about the U.S. dollar Swiss franc and also the euro yen. The U.S. dollar Swiss franc. Now, the question was, okay, I'm on the 5-minute time frame. Is the Swissy still going to rally for the rest of the session? Short answer, I don't know. Nobody knows. We know there's really no more market drivers out. We've already got some tariffs that came across the board. I'm going to show those today. It's tariff day, but we're definitely going to talk a little bit about the impact of those tariffs and break down exactly where they are with regards to the global economics. All right. So the question was, Shane, U.S. dollar Swiss franc, 5-minute chart, is it going to keep rolling higher? And I said, well, we sort of like the top side of this market, but right now I go to a daily chart. Now, why would I be looking at a daily? A couple of things. This is our 920 crossover. You can see we have the crossover right there, and then the pullback, not the best trade in the world, but we've had a lot to contend with tariffs. Right now, price is starting to break back above that 38% level, which is right around 80.72. So if the question was put to me, Shane, is this thing going to keep rolling? Is it going to move higher? What's going to happen? I genuinely don't know, and nobody does. But I will tell you what I do know. I do know this. Anytime you see compression around a key level like that 38% zone and you're above it, you got to feel pretty good. So I believe a 5-minute chart right here, you're going to have potentially a crossover. You're sort of in the dead center of your RSI, so not really not really an opportunity to buy, I wouldn't say. But do you think that this is going to move higher towards the end of the day? I genuinely don't know, but we do have the support zone on our side. We do have that daily crossover signal on our side. So if I had to pick a direction, Shane, which way are you going to go, up or down? I would say up. I think that's the ticket for us here in the dollar Swissy. So I hope that helps with that. As far as the euro yen was the same exact question. Now, this is a little bit different. We're not going to use the 920. We're going to use my Bollinger Bands and my Fibonacci's and things to try to ascertain or figure out exactly what price action's likely to do in the future. So remember, we don't know what's going to happen in a market. Nobody does. And as soon as you start thinking that you do, I mean, as soon as you think you've got this thing down, you better reevaluate because it just gets away from you. Don't project on the market. All we can do is manage our risk and get in. Dave F19, good to see you. Steve Francis, welcome. Tina Jean, good to see you, Tina. Always welcome. Guys, all we can do is manage risk and use our technicals to sort of project maybe where price could go. But the follow-through on these trades is the toughest part of trading, and I'm getting a lot of questions on, Shane, is it going to keep going up? Is it going to go down? I genuinely don't know. But what I can tell you is market structure. This right here, the last 2 days was a nice break here in the euro yen, and you're trading higher. You're also above that 13-period EMA, that 13-day EMA. That's big for me. You're also above 38% down there at 71.25. So those are all bullish indicators. Now, does that mean that the market's just going to explode to the top side? I doubt it, just because there really aren't any market drivers. You've got really one more full Forex session left in the trading week. What could happen with this euro yen? Well, if we go down to a 5-minute chart, and the question really was, Shane, is this thing going to move higher or not? Once again, our key technicals are sort of down here. We got a pivot right off of that daily moving average and a nice run forward. And about the last 20 minutes, what I would be looking at on a 5-minute, I'd say, okay, there's a sort of a liquidity grab, spike high right there back at 10:10 my time, so about 12:10 Eastern. Right there, that would be a key level for me, 170, 160. It's just that those types of things, typically, they get run. So if I was going to say, okay, up or down right here, I'd probably say up. So the fundamentals are sort of lacking for these two pairs right now. I think the biggest thing affecting all of it's tariffs. Do we believe the market's going to move significantly higher from now until tomorrow's close? I really don't know. All I can tell you right now is that the dollar Swissy sort of in a bullish situation here on the daily, and the euro yen's the same. So if you wanted to play those to the long side, I sort of agree with what you're doing. But on a 5-minute chart, I mean, I can tell you horror stories about gold futures on a 1-minute chart. If there's a bunch of sellers come into the market, guys, they can bury the market, and it doesn't matter what our technicals say. So always keep that in mind. Let me see. Yes, sir. Good to see you. Hey. So as far as those short-term market reads, that's great. That's one of the things that we did want to cover here today. I like to take questions. If there's any other markets that you want to get to, be sure to let me know. All right, guys, let's get on with this. Welcome to the Switch Markets community. If you want to trade any of these assets that I'm talking about today, head on over to Switch Markets. Also, remember, they've got sort of a reverse KYC program, which means you have credit up to $2,500. You can go ahead and deposit up to $2,500 and trade before you pass your KYC. And that's designed to get you up and running as a trader as quickly as possible. I know one of the most frustrating things for me in the futures game is trying to open a new account with a new broker. Typically, they're pretty fast. I can get one open in a few days, but sometimes they really drag on. So let's do the math here. If I was going to open an account and it took me a few days to get KYC, pass all that vetting, and then I got to deposit again, and that's going to take maybe another few days for the funds to clear. I know Switch is really, really fast at deposits, but and a few things for funds to clear, what am I going to be looking at? Like a week, maybe? That's possible. I've been out of the game for a week where I was frustrated. So this reverse KYC program, up to $2,500, head on over to Switch, dial up live support, get the details on it. They'll get you up and running. And also when you fund with $50 or more, you get access to Pine Connector, which is going to really link TradingView and Andrew MT5, we made a video on that channel as well. And then you've also get access to Algo Builder. And we're going to be talking a lot more about Algo Builder in the next 6 months. So be sure that you tune back in. As far as what are we looking at today, the BoE interest rate decision is our key economic event. We're not even going to talk about the jobs report, jobless reports, whatever you want to call them, for today here in the United States. The weekly figures, they don't matter. And the reason why they don't matter is because everybody's wondering about the stats now. I mean, the folks that reported the jobs numbers last Friday got fired. So what does today's numbers mean? To me, less than nothing. U.S. equities, though, down a little bit. We're seeing some action, really, in anticipation of the tariffs. Let me see. Catmandu, 999. Good to see you. Let's see. So let's get right to it. I want to start with this trade update, though, because it really is gives us a good opportunity to have a teachable moment. And what a teachable moment is, it's like I was an athlete back in the day, back in the old days when I was young, like a lot of you. One thing that they always taught us, the coaches always taught us, was teachable moment. And a teachable moment could be, if you're playing baseball, maybe you struck out. If you're playing soccer, maybe you got a yellow card or a red card because you lost your temper. Maybe if you're playing football, maybe you threw an interception or something. I was a quarterback, so every time that I made a mistake, it was always a teachable moment. And the idea is not to make the same mistake twice. Now, as traders, you're going to make mistakes. You are going to make mistakes. I don't care who you are. I make mistakes. Not very many, not anymore, but still you make mistakes and you go, oh God, why did I do that? Or how did I do that? Or what was my mindset going into that trade? And that's absolutely imperative that we don't make the same mistakes over and over and over again. What I'm going to talk about right now is going to be controversial to many of you. And if you're a systems trader or an automated trader, let's say you're using EAs to automate, then you probably need to stick with your profit targets and your stop losses. You probably need to do that, and you need to do that for a period of time until you understand the tendencies of how these trades unfold. You have to do that to give the system a chance to work, all right? If you're a discretionary trader, then you have decisions to make really every minute of every day or every minute that you're in the market. Do I stay or do I go? I mean, guys, there's only a couple of questions as a trader that there is. There really is only a few things. Number one, is the market going to go up or down? Am I bullish or bearish? That's the first thing. And the second thing is, do I stay in or do I leave? Do I stay in the market or do I cut bait? That's it. That's all there is to it. So when we look at this U.S. oil trade, it's easy to sit around and say, I was a loser. Well, we talked about how it unfolded yesterday. And what we saw was a major rally about within 14 pips of our 100 pip profit target. And then we saw a reversal, and eventually this thing got stopped out. So let's go ahead and take you into the price action and go through really the mindset of what this means to your trading. It's not a pretty story. It's not a pretty sight. This incorporates the swing concept, the concept of swings, and I'm going to talk about that in just a second, but it's something you need to be aware of. So we had our long-term level up here, and it was right around this zone. What was it, 64, 64.50, something like that. But what we did do is we did make sure that we understood we were a little bit bullish from that level, that 64.70 area, 64.79. Well, let's take it right down to brass tacks here. Let's go to a 30-minute chart and see exactly what happened to our trade. Okay, our profit target was 100 pips up here. So if we went long at 64.79, it was going to be right up here at 65.79. Now, the question was put to me several times, what do I do, what do I do, what do I do? I'd say, okay. We actually entered this. I put this trade idea out right, and it went live right before we came online back on, what was that, yesterday. Price came down, hit our entry, bounced up, exploded up in the next 30 minutes. So if our entry was 79, this price bar right here went to 65.65. Boy, we're 14 pips away from our profit target, all right? So we had a decision to make. Are we going to let this thing run and hope it reaches our profit target? Or are we going to manage it from the backside and maybe try to lock in some of these profits? Now, I'm not talking about a trade that sat there for 2 days or 3 days, and then we finally got a break, and then everybody's happy that you hit your profit target. We're talking about a trade that came down. We got entered right here. We took a little bit of heat, about a 16-pip draw, and then we had a big flood of volume. Price jammed in our favor, and we were in just fantastic shape here. It looked like we were going to get paid off. That's what I call a quick turnaround. 30 minutes, and this thing rallied 85 pips in our favor. What happened, though? So if I'm committed, if I'm all the way committed into hitting my profit target, and the market reverses against me, you get stopped out down there at 63.79. This was a static 100 to win 100 type of a trade idea. Technically, that's a loser. But what happened? We almost hit it, 85 pips, 86 pip profit, and then took a 100 pip loss. That's the concept of a swing. Now, what that means is for your account, you were ahead 86 pips. Let's say you were playing for $10 a pip. You were up, $860. All right? You were up $860 on the trade, and you ended up losing $1,000. You lost 100 if you let this trade go against you. That's called a swing. That's a 186 pip swing. That's an $1,860 difference in your account. You're saying, okay, Shane, but you're measuring the absolute top. Yes, I am. But what I'm saying is you've got to make a decision. When price goes that far in your favor, 86 pips, 75 pips, 50 pips, whatever it may be, you got a decision to make. Now, you can move to break even. In that case, if you took a break-even trade, you're out at zero. You didn't lose anything. You didn't make anything. But that swing in your account balance is only about $860. So that would be a drawdown from the top of this winning trade. Okay, that's half of 1860. So that's better. Maybe you have a trailing stop on something like that. For me, I'm looking at this going, I'm watching this first 30 minutes, and I'm going, okay, that thing exploded in 30 minutes. Where'd my 30-minute bar close at? 65.20, 65.29. That's still tough. But think about it. Even if I got out at that close, that bar close, 65.29, my entry was 64.79. So 21 plus 29 is what? It's 50 pips. So my swing, let's just say I exited right on that bar close. I didn't like it. This is a little wicky. Maybe I gave it a minute and bailed out. I'm still plus, 500 on the trade? So my swing would have went from 860 to the top side, plus 860, down to plus 500. That's not bad. That's not bad. You'll find that when your swings are plus, not negative, you're going to last a long time in this game. Now, getting out of that trade, what would have led me to get out of that trade? Timing. That was fast. That was fast. And when you get a quick bump like that, I highly recommend locking in some profit. It's not even enough for me to go break even. I mean, I at least take 25 pips. I mean, if your entry point's 79, 64.79, at least put it at 65.01 or 65.05. At least take something for your money. Now, a lot of people are going to disagree with that. They're going to say, Shane, that's going to undermine your performance over the long haul. And I would say, no, it's not, because I'm not necessarily a systems trader. Now, if you're trading an EA that's telling you that, okay, we're going to wager 5 pips here and we're looking for 15 pips profit target, then you have to do that. Then you just let them run, because that's within the framework of a system. But if you're a discretionary trader, or you're a technical trader and a fundamental, or a hybrid trader like me, you've got to make decisions about, okay, I got a lot of money right here. We got on top of this. Should I take it? I highly recommend taking something for your time, because I will tell you this from experience. When you go up and flirt with your profit target, and then you get the reversal and get stopped out, you're in bad trouble psychologically and financially. $5,000 account, let's say you just took a $1,000 hit on that. What about your swing? Your swing was 1860. That's half your account on a swing. You've got to figure out how to manage those trades for yourself. Find something that you agree with. I know exactly what I'm doing. I'm taking some profits. As soon as that thing jams in my favor by that many points, I'm making sure I get paid something. I'm getting paid something. I'm either going to exit on the first red bar. Even if you did that, you still made some money. Or I'm going to have something maybe above a key level. Lots of ways to do it. Lots of ways to do it. So that's sort of a teachable moment there. I definitely wanted to cover that, because I got a great question from a trader in the room that was dealing with some similar issues on open positions that they had. Dre Day, good to see you. Dre Day, welcome. Team Marina, loving the Algo Builder. Yeah, Algo Builder's a lot of fun. You guys should definitely be checking out algobuilder.com. You get it free when you fund an account with Switch. Let me see. What do you think about the FTSE? I'm trying to buy the deep now. Yeah, I'm going to go ahead. I'll cover the FTSE Dre Day. Absolutely. Do you think it's advisable? We'll look at that in just a second. We're going to get into our pound talk now, our pound pairs, and the FTSE. But I want to talk a little psychology. NMC, good to see NMC. Let me see, Alan, it's too fast. Absolutely, it's too fast. When you get a big move, and I mean a big move in your favor, and it comes that fast, you got to take it. Now, it'll be different if you sat there for 4 hours waiting for something to happen, and then it finally happens. And then I'd say, yeah, you probably ought to let it go. But when the volume comes that hot and heavy, and you get a big runner like that, nobody ever went broke taking a profit. Nobody I know anyways. All right, guys, the BOE speaks. Remember yesterday I talked a lot about the BOE and what it could mean to the Great Britain pound and also the FTSE. Let me just dial up the FTSE right now, and we'll go ahead and look at that. And then we got to look at gold as well. We got an interesting situation setting up in gold. But for the longest time, most people were sort of in the camp of the BOC being hawkish. And that's sort of what we saw today. Even though they cut interest rates, we talk a lot about forward guidance. Well, this is what it's all about, guys. You cut interest rates, okay, by a quarter point. Now, the idea there was, hey, listen, we're going to put more money into the system. We're going to stimulate economic growth by making our lending rate lower. That's easy. That's supposed to devalue the pound, right? Going to be more pounds in the system. They're not going to be worth as much. Well, here's the issue, though. Forward guidance. We all knew that they were going to cut. Just like last week, we all knew that Jay Powell wasn't going to cut. But it's about the verbiage, and it's about the tone. What was the tone? BOE MPC vote cut. 5-4. We were projecting 8-1. It was not overwhelming to cut the interest rates. Inflation is still very much persistent. The BOE barely cut interest rates here. We were projecting 8-1 on a cut. We got 5-4. That is hawkish. That means that there's people in that room that didn't want to cut this time, and they're probably not going to be talked into cutting next time. That's absolutely huge. So when we're looking at how to interpret this, forget about this bottom line. We all knew that. Everybody knew that. Okay, we all knew that. What we didn't know was the vote. We didn't really know, okay, who voted for what? What type of ambitions are there? Is there a major problem in that boardroom? There is. What happens next time out? Probably not getting a rate cut. You're probably not getting a rate cut. So that right there is being taken as a hawkish indication for the Great Britain pound. Right now you see the pound's up about 0.5% against the dollar. We're going to go ahead and take a look at that in a second. Right here, here's a good look at it. The Bank of England cut interest rates by 25 basis points to 4, the lowest since 2023, in a rare 2-round vote that underscored sharp divisions over how to tackle sticky inflation and a softening economy. A 2-rounder. So I wonder who folded at the end. Who was the tiebreaker? What, did they flip a coin to decide whether to cut or not? That's the message to take out of this. Extremely hawkish. The BOE is still worried, still very worried about inflation and what's going to happen to the British economy. We'll just have to wait and see. A lot of that has to do with tariffs. You can see right here, here's the prime rate going to 2023. Still trying to take the slack out of the system after COVID, and then we flatlined, and then we came right back down. Do we come down further? I don't think so. I think that vote tells us that, yeah, we're going to sort of hold the line for a while, even if the goal is to end up down here at 3.1 or something like that. And then right here, take a look at these. I love the top stories. They're my favorites. Take a look at the tone. Let's see. Bank of England cuts interest rates to 4%, the lowest level in 2 years. A divided Bank of England cut rates. Pound jumps. Why would the pound jump? Because the decision was not unanimous. There was a major move in that room to make sure that the interest rates stayed high enough to pair inflation. Another Bank of England cut this year is less likely. Absolutely. Bank of England narrowly votes. This is the one I love. There was a quote out from Andrew Bailey, and I don't have it in front of me, but I was reading it earlier. I believe it was in this one right here, from the BBC. And Bailey said, it was a balanced decision. I said, yeah, whatever, guys. A balanced decision. It was a good decision, balanced decision. Yeah, you guys shook the markets up because we all thought we were getting a rate cut. All right, let's start with the FTSE, then we'll get into the pound. We had a question there for the FTSE from Dre Day every day. Let's see. Okay, do I think it's plausible buying the dip? Well, you see right here on your daily time frame, what do you have? You're off about 0.39%, not necessarily the move of the century. Let's back this off to a weekly and see if we can find a key level to work with here. Something like this. Interesting. I mean, this is beautiful market structure if you're a Fibonacci trader. I mean, my eyes just lit up. I don't know if you guys saw, but I got excited there. I said, oh, yeah, we got something. 89, 88, something like that's absolutely fantastic bid. I would be bidding 38% and not looking back. 62%, the back end of that golden zone, beautiful. 88.65. Why is it so great? 13-week EMAs down there at 88.76. I mean, that is absolutely fantastic. We have a trader at How to Trade that reaches out, and we're in correspondence, and they really appreciate the convergence of the 13 EMA with the Fibonacci levels. And that, when I see that, I mean, it's just all systems go. So that's a great one to be looking at, especially if you get a deep pullback. I don't think you're getting a deep pullback, but maybe. So the negative action is because of the BOE being a little bit more hawkish. So the question is it a good time to buy it right now? Now, the time frame that I would use, I would be looking at my 30-minute charts. We're nowhere really near our dips where I would be looking to buy a dip, but that's okay. If we're going to go intraday, let's take a look at what we have to work with. Not really a whole lot. Nice spike right there. That was on the U.S. Open. And then the negative trend continued. Sort of an L. We sort of have that capital L formation that I've talked a lot about. Fibonacci's aren't really going to help you. You could come back and really look to the open of the London session, which would be back here about 1 a.m. my time, about 3 a.m. Eastern. And you can say, okay, what's the daily range? Well, you can see right now we're still trending lower. We're making lows. It's also tariff day. Dow Jones is coming off about 350 points. You're starting to see money flow out of equities a little bit, except for the NASDAQ. There's probably big earnings out later today. I believe there is. I don't think it's Palantir, but it's one of them. I would stay out. So Dre Day, I can't tell you what to do. But advisable. See, I can't say things like advise. If I'm a financial advisor, I should have the BMW out front. And I should have went to the office this morning. Just a funny side note. I live in a tiny town here in Montana, Dillon, Montana. It's tiny. There's about 5,000 people in here, and I swear there are more bars, banks, and investment firms in this little town than there was probably in the whole half of Salt Lake City where I lived in the past. There are 4 Edward Jones firms, which are investment firms in this little tiny 5,000 person town. So advisory, when we use the word advise, I can't advise anybody on anything. I can tell you how to set up your MT4. Well, some of it. I don't know how to do the fonts yet. I'm learning. But so no, I don't advise anybody of anything. But I would say that this is a tough time to buy this FTSE. That's for sure. Let me see. Tina, typical. Yeah, it is kind of typical. Definitely some squabbling in that room. Abdul, good to see you. Abdul. Rod James. Hi, Shane. Thank you so much for all the amazing content on this channel. Greetings from New Zealand. Thank you, Rod. It's been my pleasure putting out the content. It's always a lot of fun interacting with traders, though. That's the most fun. We have here is just looking at charts and sort of listening to what you guys say about trading and trying to learn and implement some of the things that I've learned over the years and try to pass that along. So that's fantastic. Greetings from New Zealand. I've never had a buddy that went down there hunting red stag a while back. He's still got it on his wall. The thing's huge. I don't know how they flew it back to the States, but I've always wanted to go. I've always wanted to go see it. Let me see. Trade day. Laugh out loud. I guess I'll go with an aggressive with a small lot size in the Asia. I tell you what, I would wait for the dust to clear. That's not a bad play. Let's see, Alan M. Crossover developing on the dollar-yen 4-hour. Decent swing low for the stop also. Absolutely. We'll look at that one in a second on the 920. Let's see right here. 920 gold. We're going to get back to the yen here in a second. The Great Britain pound. Gold, though, I did want to cover this. We are trending higher. Remember our buy. We think this could be the launch point for our test of 3,500. This could be it. So I thought that was a pretty good area right there to buy spot gold. There was our gold candle on our 920 crossover, and things are looking up. I mean, you're not very far above entry, but entry would have been somewhere down there around 33.80, so up about $7. Watching 3,400 closely in gold. All right, back to the Great Britain pound, and then I definitely want to look at that 4-hour crossover, Alan. We're going to look at that one in just a second. Great Britain pound, Japanese yen. Now, I had a question the other day, and I do apologize. I think it was from Bobby Bob that asked me to look at the guppy here, the Great Britain pound, Japanese yen, and I missed it. I forgot about it. So sorry about that. My apologies. I try to cover any and all questions. That one I just forgot. I don't know why I forgot. I just forgot it. So key levels are huge for me. And daily chart, if we're looking at a daily, what's the key level here? Spike high right there, swing high back in July. I believe that's probably the high for the year, isn't it? Looks like it, absolutely. So if we're looking at a key level, it doesn't get any more key than 200, and we see this over and over and over again. Your high right there is 199.97. So the seller stepped up and defended the key level of 200 and sent this market down. Now, when we see things like that, we understand that, okay, is that going to be the absolute top of the market? I don't believe so. And the reason why is typically a key number is like a magnet. Think of it. It's like a magnet. I mean, what it's going to do is it's going to attract interest. And that key level sent in a lot of sellers. Now, are the sellers done? Have they won the day? Well, it doesn't look like it. Because right now, after that interest rate decision and all the verbiage, you're seeing the guppy really rally. You're up about 0.5%, and you're rolling back towards that 200 level. In my view, if in fact you don't see another rate cut or things really lighten, the tone lighten out of the BOE, you're going to see a shot at 200 again probably. Now, does that mean to buy the market right now? You can't really buy it right now. And we're going to switch to a 920 here. Maybe we can get a position. Maybe we can't. But what you can do is really look at your key levels, 200. This spike high right here, you're going to be looking at that. We're 199.50. That's a big one. We're still about 200 pips off of this. I think you got a pretty good shot to get up there. Now, would I be a net seller or a buyer? With Fibonacci's, I could do something like this, and I could bring these, and I could give you a bunch of resistance levels that you could scalp on the way up. Right there, we broke above 62%, so the next stop's probably 198.58. So I would want to be on the long side of this right now. Would I want to sell right there? I'm not interested. Take a look at this move, one big daily move, and now we're sort of clawing back into this, filling this market in, what you'd call sort of a weak chain. 1st of August, what happened there? It's a U.S. jobs number, all right? Big crash there, and now we're just gaining back these. I would like to see this market right up in here, right around 198.50, and then we more than likely are going to make a run at 200. Now, a lot of that depends on what the BOJ does, what the Bank of Japan and the yen policy is. But right now, the Great Britain pound is really starting to flex, and that 5-4 vote, you guys start to see the impact of that 5-4 vote right there, and that's absolutely key. Absolutely key. So we're watching 200 to the top side closely. One thing I do want to check on, though, and let's go ahead and pull up that guppy on the 920. Okay, what did we have? Big sell. In my view, you can't take that sell. Why? Because NFP wrecked everything in the Forex that day, August 1st. Wrecked everything. Right here, though, you're drawing back. Your RSI on a daily, I don't believe you need it. I mean, you very rarely get outside of the bands. I wouldn't even worry about your RSI confirmation. But what are you working on? You're working on a crossover. So if we sort of stagnate a little bit in this guppy and then get this crossover, I like it to the top side. I really do, just because of the fundamentals. Great Britain pound, hawkish. All of a sudden, the BOE sort of came off as hawkish, even though they cut interest rates. What do you think the Bank of Japan wants to do as quick as they can? They want to get back to a negative deposit rate, get that Abenomics going, try to get some FDI, some foreign direct investiture, make those exports hyper competitive. And now they have tariffs to deal with. That's even more of an incentive to devalue the yen, and it's something the BOJ has done repeatedly for the last 25 years. I would say I would be looking towards the long side of this market, and I would probably be using this 920 crossover on a daily to get that done. Definitely want to do that. Let's take a look at one more Great Britain pound pair, euro pound, euro Great Britain pound. 2025's highs up there at 87.57. You saw sort of the big correction now. I thought we were headed back up towards that range, and today's high was about 87.43, and now we're in an absolute free fall. Don't mess with these types of trends, especially when they're driven by macro events like a Bank of England. You don't want to play around with that. You want to sort of get in line with it. So if I was going to be trading this probably for the next 24 hours until the market closes tomorrow afternoon, I would go right to my 4-hour chart. What do you want to do? Sell it. Run with the pressure. Little pullback back there to about 87. Right now we're printing 86.68, so maybe like an 86.89, maybe an 86.90 sell. That zone right there is relatively solid. If you're looking to join the pressure, join the bearish pressure, we don't really see any reason why it would end. Just remember, tariffs are a big deal. BOE is a big deal. A lot going on in this Euro Great Britain pound pair, so definitely keep an eye on your macro news cycle. You don't want to get fooled on that. All right, let's see right here. Dollar yen we wanted to look at a 920. I believe it was a 920 on the 4-hour time frame. So let's go ahead and take a look at that. I believe it was a dollar yen. On the dollar yen 4-hour, decent swing, stop low. Yeah, I mean, it's starting to develop. I like the creativity there. I can tell you that, Alan. What you've got here is sort of a big sell-off. You got a sell signal. You've definitely still got that downtrend that goes back to NFP, no question about it. This formation right here is one that I really like. Now, we didn't get into oversold territory, in my opinion. Trading crossovers on a 4-hour chart or a daily chart, I don't believe that you need the RSI. I would be looking at RSI probably when I'm down at a 30-minute chart, and even your 30s, you could probably get away with not using the momentum oscillator for confirmation. But take a good look at what's happened here going back to that NFP. It's an L formation. That's a capital L in the English language, so you'd be looking at doing something like that. That's extremely bearish. That's run and rotate. We talked about that. Fair value, essentially. Remember that concept from yesterday. Well, what do you have here? An area of fair value right around 147.50, and we're right at that. So if you got that crossover and you would love to get a crossover and a settle right in there, you might have a chance to grab a runner for 100 pips, and maybe, and more than likely, the way markets work, you get these big runs and rotates. Well, if we get a crossover here, you're right. You're going to be able to set your stop loss beneath that swing low, and with any luck, I mean, maybe go back up there and attack that NFP range. Why not? There wasn't a lot of business done up there. That's what we call a thin chain. That would be your directional move. What would that be? I don't know. What do they call that? I call it a market imbalance, essentially. That's when all the sellers outnumbered the buyers. There weren't any takers there, but was it real? It was news-driven, media-driven. We could easily rally from where we are here, but we got to get the crossover first. I like the idea. That's good creativity. I mean, I really like it. I think that's fantastic. Let me see. Trade day, or better yet, wait till the session tomorrow. To go on that FTSE. You could definitely wait for the London session kickoff tomorrow. I don't think there's any problem with that at all. Just sort of wait. Are we moving lower? It's either that or, if you really want to buy that dip, you wait for our macro technical on the FTSE. Maybe even 9,000. That might not be a bad area either. So something to think about there if you're interested. Let me see. Yes, sir. I'm looking to attack that said NFP range on US dollar JPN, but it's a battle down here for real. Yeah, I mean, there's no question. I mean, this is just run and rotate. One thing that I do like about the crossover idea in a way that we could get a little bit of good utility out of it is it's going to help us really set our stops. You're going to know where to get out at. It's not going to be like we try to buy up in here. Well, I mean, hopefully I can't say hope, but if we get the crossover here in the next, the next few hours or whatever, bidding down in here is desirable. I don't know that I want to bid up in here after a big runner. I don't know about that. So we'll have to wait a little bit and see how this develops. Let's see. We had a couple other markets we want to hit. Let's get on over here to our switch markets. Great Britain Pound USD. Now, this was one of those trades that we really liked. We really, really liked it. And the reason why was the Fibonacci's were easy. The Fibonacci's were easy. You had a nice spike low down here. You had a nice spike high right there. Monthly time frame. And what had happened was you got some real good stuff right there back in, the beginning of the year, essentially. And then there's your top. You pulled back to 38%, which was 38% of 2025's range. I mean, that's absolutely fantastic, 130, 150-ish. And we've talked about this trade in the past, but we really want to highlight it after that BoE. I mean, we hit that perfect. What does that tell us? It tells us we're still bullish. The bullish market structure is there. The real question is how do we get a market entry? How do we get a trading entry on this pound? And right now, you're on sort of a daily chart. You probably would have to dial down to a 4-hour. I want to be on the long side of it. I really do. The big issue we're going to have is finding an area to build our Fibonacci's. So right in here, that was sort of a bullish pennant you saw, and then some compression, and then a big break. There's a lot of different ways to approach this. For me, I don't know. I mean, let's try our 920. Let's go back and check out our 920 coded. See if we've got potentially a crossover here. Okay, there was your cross. That was sort of back in our area of fair value, and that thing's really taken off. So you're already sort of bullish here in the pound dollar. We rejected that key level. You'll see right our monthly key level. So I would like to be on the long side of this. The biggest challenge we would have as a trader is where the heck do you put your profit target? Did you already make enough money to make this worthwhile, or is it worth maybe staying in and trying to get more? Give me some more. I don't know, guys. I think that if you made a lot of money and you got in on that crossover, if you bought in down there at 133, you're up 125 pips. Is it time to take the money? Could be. It definitely could be. All right. That's about it for today. That's a pretty good recap of what the BoE did and what they said and what they meant. Love this gold. Look at this gold buy on the 4-hour 920 crossover. That was fantastic down there at about 33.48. And then our daily took us a little bit longer to get in. Still pretty good, though. We're up about $10. You're seeing the U.S. dollar. This is why, you look at something like a gold and you say, okay, gold's up, X amount today. What is it up today? About 0.5%. That's not the trend day of the century, but the dollar's sort of holding firm. Typically, you'd look for a big bearish move in the dollar before you got a bump out of gold, and that's not really happening today. Dollar's sort of firm, right around 98, the dollar index, so it ain't great, but gold is still deciding to move higher. You can see silver's up. We're going to talk silver tomorrow. It's closing in on our 40 level. I think we're going to hit that 40 level. That's big. You can see Bitcoin's up 1%. A lot of these risk assets, aside from stocks, are up. Why are they up? Why are stocks down? Right there, tariffs. It's tariff time. Even as the latest tariff rates kicked in on dozens of U.S. trading partners, much uncertainty remains. Yeah, nobody really knows what to do right now. Equities are taking a bit of a hit, but you're seeing right there. There's the truth, from Truth Social, from Trump. It's midnight. Billions of dollars in tariffs are now flowing into the United States of America. So here's all the tariffs. There's two big tariffs. These are big ones too. Brazil's got a big tariff on it, and that has to do with their leadership down there, Lula. I don't think Trump will ever do business with Lula. We'll just wait and see how that goes. India, 50% tariff because of the purchases of Russian energy, Russian oil. There's rumors today. I'm not even going to circulate them, but there are rumors that there's going to be a big peace summit between the United States, Trump and Putin, essentially meeting potentially in the UAE. We're going to keep you posted on that. But supposedly there's a deal potentially in place. that could settle the Russia-Ukraine war, and that'll bring probably a lot of these tariffs off the board, depending on what side of the aisle you're on. Syria, Laos, Myanmar, Switzerland. Switzerland's a big one. They couldn't get the deal done, and it went down. Expect a deal with Switzerland. Expect a deal with Switzerland. I don't know when, but expect one in the next several days. I think up probably a week tops, and there's going to be a deal there. Canada's another one that's going to really be problematic in a lot of ways. U.S. construction industry depends on a lot of timber from Canada, so that's going to be one of those deals where there's going to be motivation on both sides to get that deal done. Also, oil exports from Canada to the United States, about 90% of natural gas and oil exports go to the United States from Canada, and that may be changing. But for right now, that's absolutely huge. Places like Iraq, Serbia, Algeria, those probably aren't going to move so fast. But some of these G8 countries, Canada, Switzerland, expect deals. India, I expect a deal there relatively quickly as well. 50% tariff. I mean, that absolutely hurts. As far as Brazil goes, though, here's the thing, and I'm just going to call it straight up. I've been on the fence about tariffs and things. I don't really know what to make of them because we've never seen anything like this in the history of the United States or really global economics. You have to really go back to the early 1900s to see this type of behavior out of the United States and try to figure out what exactly it means to the broader economy and to the broader global economy. That being said, you can pick certain things out and understand what they have an impact. And that tariff on Brazil, 50%, the price of beef here in the United States is at all-time highs. And at one time, we were importing a heck of a lot of beef from Brazil. So you could see a limited deal where some of those tariffs get trimmed on certain export groups. And I expect to see all of that across the board. But the U.S. in the I won't call them the negotiation team, but I guess the economic team that they've put together. They got some sharp cookies in there, but it's going to take them some time to see exactly what tariffs are impacting which goods and services the most. And then I expect them to go through on a item-by-item basis and say, okay, Brazil, I'm going to leave a 50% tariff on XYZ, and then we're going to go ahead and cut that tariff down on, say, your beef or your coffee or your soybeans. Remember, that's a huge region for soybeans. So the tariffs are complex. And so anybody that's on CNBC and they're telling you, oh, tariffs this, tariffs that, the complexity of this type of a program is unprecedented, and we don't know what's going to happen to asset prices. That being said, we're going to have a lot of opportunities to trade individual commodities because as these tariff deals get cut, you're going to see a lot of variance in commodity pricing. You just will. You might be in a position where, we've been watching natural gas sort of, stabilize around 3, and then crude oil is still falling down to about 64 now. And I think the bottom is way down there for crude, way down there. So this is going to be fascinating stuff. It really will be. All right, Lewis Shepard. Hey, Shane. Hey, Lewis, just going to sign off right now. We've been going for almost an hour, so I think we've covered a lot here today. If you have any questions at all, be sure to swing by howtotrade.com. Send me a PM. I'm more than happy to get back to everybody in short order. I will typically answer within an hour or so. Usually I'm around. I'm around till, I won't say late in the evening here, but still quite a bit in the evening. And then let's see, Alan. I moved my stop to 1-to-1 yesterday on the Great Britain Pound USD. Got stopped out this morning at 1-to-1. All right, but it's money. And think about the mentality there, Alan, like what we talked about with that U.S. oil trade that we started the stream off with. That U.S. oil, it's better to walk away with some money than no money. And I can't really stress that enough. Guys, believe me, you've watched a bunch of videos in YouTube land. Maybe you've been subscribed to Signals. Maybe you've talked to people that are supposedly professional traders. And one common thread in all of it, especially the ICT stuff, is traders trying to set themselves up for 1-to-4s, 1-to-5s, 1-to-10 payoffs. That means for every, when you wager $1, but typically you're looking at to make $10. And I want you guys to understand that I have no problem with anybody doing that. Remember, if it makes money, it's the right answer. And if you're psychologically there and with it and are cool with it and can do it, then do it. Let those type of strategies and systems run, because it's true. When you hit a 10-to-1 payoff, and they're there in the markets, they really are there. When you hit one of those, it feels good. You made a stack of cash, and you don't have to hit them very often. You really don't, to break even. My problem is the consecutive losses. So if you go to buy a system or a strategy or do some back testing of your own on maybe some of these, the 920 or the 9 EMA or whatever, instead of focusing on profitability, focus on the consecutive losses. How many times did this thing lose in a row? Because you may have the most profitable system in the world after 5 years of trading it, but there might have been a period in there where you lost 30 times in a row. And people roll their eyes. Believe me, if you get down to the 1-minute charts and the 5-minute charts, you can lose 15 or 20 times in a row, especially if it's a scalping system where you're trying to take, a 5-to-1 payoff or a 4-to-1 payoff or a 10-to-1. Always remember this. I'm telling you this from experience. When people backtest, they take their strategy, they put it on back data, and they try to develop the best way to trade it. Okay? This is a process called optimization. Now, I was part of an optimization study back with the 7V Bar Trading Group, my partners and I. The idea was we had a set of proprietary indicators. We were going to put it on our back data, and then we were going to optimize. Okay, where should our stop loss be? Where should our profit target be? And when we optimized it, that was to give us the best P&L possible. All right, well, that's great. So we had some indicators that showed, you make $200,000 or $300,000 in a year taking these giant moves off of WTI crude oil. The problem was, inevitably, the optimization results for every single one of these strategies was the same. It ended up being, risking, I believe one of them was 24 ticks to make 108 ticks. And you took the trade in the first 45 minutes of the trading day on a signal that was sort of in a range, in a real tight range, and you're playing a breakout essentially. And it showed us these astronomical returns. It wasn't true. We just figured out how to trade last year perfectly. We dialed the system in to reflect last year's price action. Well, guess what? We took that thing into the market and just started losing money. We were never hitting our profit targets. Loss after loss after loss after loss. Why? Because the market state didn't dictate a great big profit target. It didn't dictate the 1-to-4s. It was a tight market. We were consistently getting 1-to-1s, maybe some 1-to-2s, but the 1-to-4s and the 1-to-5s weren't there. We lost a lot. And so I was sitting there going, this is not the way. All right? That's called backfitting historical data. And we learned exactly how to trade last year perfectly. Most of these folks that are selling systems, black box systems and strategies, they've done some backfitting of their own. And they're going to sit there and tell you that, well, we win 25 or 30% of the time, but when we win, we really win. That's great. The first question you guys ask them is what? All right, show me the historical results. How many losers in a row? Because if that thing loses 12 or 15 times in a row, you're not going to have any money left to trade. Lived it. Had it happen. Promised myself I would build something that was more feasible, more conducive to my own personality. 1-to-1, most people in the trading arena argue with it, and that's okay. Good for them. I'm just telling you how I trade, how I live with it, how I decided to build my own approach to the markets. And you guys can do the same. You just have to get in touch with who you are and what you want to do. If you're cool with taking those big moves and then coming down and taking a loss, let it run. Do it. Stick with it. You can do it. But when you get into the situation where you go, wow, I just had an $1,860 swing, and let's say you only had a $10,000 account, you go, wow, that swing to where I was almost profitable to my realized loss, 18% of my account, 20% of my account. Guys, beware of the swing. The swing will get you, and it'll also drive you crazy, so you got to be smart. All right, guys, I'm going to go ahead and sign off. We got two more comments here. Shane, what do you know of traders who turn it into a business and register with Wyoming because of the state's strict business privacy laws and hiding owners' personal info to protect the asset? I know there's a lot of crypto traders and business people in Wyoming. Wyoming's business friendly. I don't believe there's a state income tax there either. We were going to move to Wyoming. My wife was offered a big position over in Cody, Wyoming last year. And she ended up turning it down, wanted to stay in Montana closer to the family. But we were very much looking at moving to Wyoming. Hope you like snow, though. Snow and rodeo. Got some good rodeo over there. So, yeah, I really couldn't speak to their exact business laws. I do know that I believe the state income tax was, I don't think they had one. I don't think they had them, so I was looking closely at it. But there's a lot of crypto people in Wyoming. Believe it. All right, let me see. There you go, Alan. I aim for a 1-to-1, and anything more is a bonus. That's sort of the way I look at it. I mean, there's trades where I take more than a 1-to-1. You bet. There you go. Correct. They do not have a state income tax. I'll tell you what, state income taxes get old. My tax situation, we got to see about improving that for this coming year. But the federal income taxes are big, and the state income taxes are getting bigger, especially in a place here like Montana where you're seeing an influx of billionaires here, and they've driven the tax base has gone up. So it's a challenge. Lowest LLC fees. Yeah, setting up an LLC isn't that big of a deal, though, guys. I mean, that's set up a little S corp. Maybe I'll do a video on that, how you set up the S corp and pay yourself through a dividend. Hey, listen, but I'm not an accountant. I just heard the guys doing that. I don't know. All right, I'm going to go ahead and sign off here, guys. Thank you. I ran way long again. We've been doing like hour live streams all week. I like really talking. There's been a lot of great engagement, so I want to thank everybody for joining me. If you have any questions at all, head on over to How to Trade and let me know. I'm confident everybody navigated that BoE rate decision. We talked about it. We talked about it a lot. And we knew that there was dissent in that room. There's dissent at the Fed. That's for sure. So we're in for just a great period of trading. Be ready for anything on the commodities markets. Tomorrow, we're going to go Friday strategy session, 5, 8, 13 EMA scalping. Those are always a lot of fun. What time slot do I have here? Same time slot. A lot of times I'll do those early, right around the U.S. Open, but that's going to be a pretty good one. So if you guys want to do some 5, 8, 13 scalping, why don't you tune in? We'll also cover the news of the day and see if we can get a few winning trades. I've had a few this week. It's been good. All right, everybody, have a fantastic trading day. Trade the action well, and we'll talk soon. See ya.